Hi, Shane King from Harcourts, and welcome again to another session having a chat with Tracey Pye, a favourite broker from Mortgage Express. Welcome Tracey again.
Thank you, Shane.
So we're seeing it a lot in the media now, the talk of fixed rates that people have been on for the past few years that are coming to an end. So talk us through what that means for the average mortgage holder that's been on these fixed rates, what they can expect and what they can do to counteract it.
Okay, so basically what it means, a lot of people are coming out of maybe 2 and 3 year fixed rates. They've probably had a rate at maybe 2.09 or a little bit less.
Yep.
And then they're going to be looking at a rate that's probably starting with a 5. So as an example, if you had a home loan for $500,000, your repayments are going to go up $1,000 a month.
Well, that's a significant increase, and call it a 3% gap on the rates there. And obviously that's a shock to anyone's budget. So what should someone be doing to try and account for this or to minimise the impact on their income?
Yeah, so they really should be looking at when their fixed rate expires. So let's say they've got one coming up in 3 or 6 months, contact their bank or their broker to say, okay, where do you think my repayments are going to be? And start budgeting for those repayments, because it is going to hurt a lot of people.
Okay, and when they go and speak to the bank or to their broker, what should they be doing in terms of, is it worth looking at other options, other banks, talking about the rate with the bank? How can they try and make adjustments there?
So as they get closer to the fixed rate period expiring, definitely speak to your broker or bank and see what rate they will offer you. But it's too soon to jump in and, if you've got a rate that's expiring in 6 months, far too soon to be talking about what can you do now other than budgeting for your extra repayments, because if you change your loan now, you're going to break your fixed rate and be on higher repayments straight away.
So if you've got 6 months to go, obviously now's the time where you want to try and save as much to give yourself that bit of a cushion, but as you get towards the end, look at all the options available.
Yeah.
So you mentioned that a rate of probably in that low 5% window, that would be a competitive rate at the moment?
Well, I was sort of thinking you can still get a rate under 5, but just under 5. So you've also got to consider there's probably another 1, 2 maybe interest rate rises. So that's what I'm basing it on. I'm basing it on a rate of maybe 5.5%.
Okay. All right.
Yeah.
Excellent. So be prepared, do your research, reach out to your broker or your bank so you know what you're going to be dealing with. Don't leave it to the last minute. As always, preparation is the best way to approach something in that way. Tracey, I really appreciate your time.
Thank you.
Thank you.
Thanks.